Light sweet crude long-term forecast for the week of June 25th, fxempire.com. The light sweet crude market had a bearish week over the last 5 sessions, and as you can see on the weekly chart, it has been sold off relentlessly. The market managed to fall in the face of several different factors this past week, including, of course, the European fears, lack of simple demand, and the strengthening U.S. dollar. At the end of the week, the market sits at roughly the 80 level. The $80 level is a massive support level, and it will be interesting to see what happens next. Certainly, there has been a lot of buying interest at the end of the week, and one would have to think that after the massive fall like this, we should see somewhat of a bounce. However, as we all know how news driven the markets are these days, it certainly could take more nerves to go up long and buy this market than to sell it from higher. That's essentially what we are looking at doing. The $80 mark is a bit of a line in the sand for the bulls, and if it does give way with any kind of consistency, this market could fall quite a bit. We think that there's a real chance of this bounce going forward, but nonetheless, there's just simply not a reason for oil to be as high as it once was. Certainly, we can't see this consolidation between 80 and 110 continuing, unless, quite frankly, there's some type of an attack in Iran. Unless the Iranians and the Israelis start duking it out, really there's no reason for oil to be that high. So we are in a sell bias mode. Of course, if we get a break at the bottom of the weekly candle, we wouldn't hesitate to sell this as it would be a real breakdown. Rallies are to be faded, and a break of the bottom, of course, sends us shorting.